Yes.
Yes, we are. We are. Thank you for joining us. We have a couple of EXP agents on here. Sometimes it's between, 3 to 6, 7 of us here. I think today it's about 4, but it may be a couple others that pop in.
Absolutely, no problem. Yeah. How's
So,
everybody doing? Laura,
Doing well. Thank
Linda, good.
We're doing well, thank you.
we're ready. You can go ahead and introduce yourself and
All
tell us
right.
what you do and how you found me and all that good stuff.
Absolutely. Well, I appreciate you inviting me here. But I'm a EXP partner with, or excuse me, I partner with EXP with my company called CommLoan Commercial Mortgage Brokerage. So we're a commercial mortgage brokerage. We're based out of actually Scottsdale, Arizona here, and we provide services for our commercial agents mostly nationwide in the form of financing for any type of almost any type of property type, multifamily,
Break up.
industrial. I'm sorry, go ahead. Oh, Vivian, did you say something there?
Go ahead.
Okay, perfect. So,
It was my out.
no problem, no problem. Connected with Vanda on our workplace that we have. So she was gracious enough to invite me to here just to kind of speak to you all, just to kind of introduce a little bit about myself, of course, and my company. And what we do mostly with our agents, we do actually have like I said, our partnership. We have a referral system with our agents as well. So anyone that you might refer through EXP, we do provide a 15% referral commission split. So it's a great way, especially in this type of market, to, of course, not only provide services and additional services to your clients who are in need of financial lending on their properties, but it's a great way to increase some additional income as well. So that's a little bit about us. We are my company, ComLoan. We're a tech-based company. That's how we kind of pride ourselves. We started in 2018. We're definitely picking up a ton of market share right now with a lot of the traditional lenders and banks somewhat bowing out at this market. Not quite sure how much commercial deals either of you do, but it has been a struggle. I'm sure you might have felt that, probably also in the residential realm as well, but definitely in the commercial in terms of finding proper lenders that can provide speed and proper financing for a multitude of deals across the country and across the spectrum in terms of property types. So that's where we come in as a broker. We currently have over 700 lenders nationwide. So it definitely helps us out. And our main benefit is to, first off, get your clients to the closing table. Make sure they have not only a plan or a team, a B team, but also a C team, because a lot of lenders are, like I said, just kind of stepping out of the market. And we can discuss that a little bit if you have some questions in terms of, okay, hey, what is causing this slowdown? What are lenders typically looking at? What deals are getting across the table? What do I need to prep my borrowers with if they are trying to step into the realm of, purchasing or refinancing a commercial property in this type of rate environment or low property and inventory environment? So we can definitely discuss that a little bit as well. Hopefully that might have gave you a little bit of insight about us, and I'm absolutely happy to answer any questions for you and to discuss in detail maybe any type of deals maybe you've come across or any clients that are in need of some commercial financing.
So commercial, that's more than 4 units.
Yes. So in the form of residential, that is 5 units or more is considered a commercial property. And that's what that would be most likely titled as a commercial property. So your apartment complexes, your small apartment complexes, of course, your retail properties, industrial properties, offices, hotels, motels, gyms, marinas. We provide services for a lot of those as well. And that's what we would be able to provide you some financing for.
Yeah, we've been mainly doing, residential, but, you never know what might come across our desk or what people, are looking for. So it's good to have somebody like you in our pocket. Now, do you also
Yeah.
do any type of residential or is it strictly commercial?
It's a great question. I do sometimes still do residential. I still hold my residential mortgage license actually in almost all 50 states. So on the residential side, so I guess to back up a little bit with CommLoan, no, we only do commercial properties with CommLoan, but with I actually cut my teeth on residential for over 9 years, and I'm still actually working with my bank with American Mortgage Bank. So if I do have a client that is in need of residential, I do also still provide that service. Because a lot of my commercial clients, I mean, it's great to have those services on both, because there is a lot of my residential clients that are either looking to take the next step and go to commercial. Maybe they have a duplex or a couple duplexes and a triplex or anything like that, and they're looking at selling it, but they're wanting to actually move on to buying their first multi unit property, such as an apartment complex or anything like that. Or a lot of clients are looking at trying to find additional cash flow with retail properties such as Hardee's and franchises and things like that. So it's good because it's a perfect progression for people who've gone from owning their first home to owning their first investment property, such as a single family or a duplex up to a fourplex, and now they're looking at moving into buying their first 5 to 10 unit multifamily and really starting to scale from there. So I do also help from that, but also I do have commercial clients that do own properties like apartment buildings that also still own their own private single family home that maybe need to do something like a home equity line of credit or do a refinance on their property to pull out some equity to purchase a new commercial property. So I hold my license still and have my options available for that as well, but I don't do that a lot, I'll be honest with you, but I do also do that in terms of keeping myself sharp, knowing all the new changes and regulations. So I can, of course, help out with residential or commercial if there is a need for that as well.
Okay.
Great
Um,
question.
I've got two more questions and then I'll be quiet and see if anybody else has any. The first one is, do you guys do any gap funding? And the second is, do you guys do new construction for, commercial, like a 10-unit building?
Great question. So yes, we do both. And our gap funding is going to be a bridge. We do have bridge lenders that we work with. Into so yes, too. So for your first question, yes, we do offer that. For your second question, in terms of the construction, we do offer that as well. We do offer ground up construction. It's going to be in this type of market. I'm pretty much only working with debt funds and private lenders on construction deals. I just had a multi-million, it was a $9 million multi-family construction deal in Texas that was a struggle. And actually the clients, unfortunately are bowing out of it because no banks are willing to go above essentially a 55% loan to cost in this environment. And it's very hard to pencil out good deals with that type of leverage. But debt funds and private lenders are still providing some bit of capital and some bit of leverage, still up to maybe 70-75%. They're charging double digits interest rates, 10%, maybe 2 or 3 points in origination fees, but those are the things that are actually getting across the table without the scrutiny of a ton of red tape and requirements. So yes, we are doing those, but when my company takes on a construction deal, even for a multifamily, and multifamilies are great. If someone's looking right now to do a ground up construction of a doggy daycare or something like that, or a gym or a marina, those are really hard. You're going to have to come in with it, 50, almost 50% equity injection in that, which is essentially a down payment in order to get that type of deal. So if you're looking at something and you're trying to get high leverage, building a self-storage, building multifamily, building industrial, some of those properties that are very, very sought after right now are going to be the ones that are going to be the ones that get across the table and get the best lending option. So we are able to do those. Our minimum that we take on for those type of projects are a minimum of $2 million for the construction loan. So we don't really do any small construction deals. 2 million is probably as little as we'll go in terms of taking on the deal. And that is if it's a multifamily type property to an experienced investor who's done it before, is working with a GC who has had experience with building multifamily properties. And they have, of course, themselves their 1 to 5 year projections as a pro forma, their budgets, their sources and uses, things like that. And when we'll work with them to make sure that that's all put together, but we would have a little bit more of a requirement for those type of deals. But yeah, absolutely. To answer your second question, of course, yes, we are still operating and providing some services for people looking for construction deals. Depending, I guess, to put a little bit of asterisk, depending on where they're at. Obviously, if they're in some very small town in South Dakota or Nebraska, that would be a lot harder than if they're trying to build something in somewhere in Texas, Florida, California, one of the big states that are still providing quite a bit of some rent increase.
Well, I'm going to call you after this call and talk to you about something.
Sure.
Okay.
Sounds good. Absolutely. That's what I'm here for.
All right.
So,
Anybody else have any questions?
so commercial deals, where there's essentially already income on that property, right now would give someone the leverage that they needed to be able to get a more difficult deal done, correct?
Yes, absolutely. Yeah, cash flowing properties are definitely going to be a lot easier to get across the table at this point. Doing deals that are either vacant or construction deals where you're having to project that income is it's a lot harder. It's a lot more of a risk of that being there. So those are going to typically require some partners or sponsors involved that have a lot of experience, maybe other deals that they've done and that they're currently operating. They're going to be looking to put down more equity to lower that risk level for the lenders. So if you have a property that is not, already not only just bringing in income, but also cash flowing at least a 1.25 debt coverage ratio, that's a number that is very important, because even if the property is bringing in funds, let's say if it's hardly going to be covering the debt, that's still going to be what we call a projection type loan if we're able to put some loans or some debt on there. Or you're going to be with a lot less proceeds until we hit that benchmark of a 1.25 debt coverage ratio. And I'd be more than happy to go over that, what that is, if anyone has questions on what the DSCR debt coverage ratio is, because it's more of a common term in commercial. I know that maybe even in residential, you probably have, especially now in recent times, have heard of those DSCR loans where investors are using. That's essentially the same thing that came from the commercial type lending environment, and now residential has really picked up on that, to where you have investors that are solely purchasing properties, or excuse me, lenders that are solely lending, I should say, but and investors that are also buying properties solely on the income of the property. So not really caring too much about what the person themselves are doing in terms of their jobs, Their credit obviously is still important, but if that property is cash flowing and is covering the debt to a certain extent, what a 1.25 DSCR means is that there needs to be a 25% profit margin over the mortgage debt for that lender to feel comfortable that if anything happens, any stalls in cash flow, they have room there to make sure that the payment should still not affect the property and the cash flow as much.
Perfect. Thank you.
Good. No problem.
And you said the minimum is 2 million. What is there a max?
Nope. Any deal you can bring, I promise you, I will find a lender interested in it. If you bring me $100 million deal, $200 million deal, $1 billion deal, I promise that you don't worry about it. We will we will find someone looking willing to lend on that. And a lot of times when we go up higher, those start entering to the realm of what we call a CMBS type deal. Depending on it, obviously, if it's a multifamily, Freddie Mac or Fannie Mae, we do work with agencies. They can take on the deal, or we'll do what a CMBS deal is, which is a commercial mortgage-backed security. We work with some of our partners that do that, Chase Bank, Wells Fargo, things like that, and they'll usually be the ones to take on some of our higher tier deals as well. So we've got plenty of room for almost all realms of loan amounts. Now, if it's not a construction deal, for EXP clients, we'll go down to a minimum of 300,000. So if it was anyone else, and if your clients go to our website, our minimum typically is 500,000 for all of our deals. But for our EXP referral partners, we'll go down to 300,000 because we understand right now in this market, a lot more small businesses are trying to find deals, and a lot of them might be around $300,000-$400,000. So we'll go down on that. But those are for non-construction deals. So rehab or construction deals, we typically have a minimum loan amount of 2 million. And it's just because it's a whole different beast. There's a ton more work that is needed for those type of deals. So we require a more of a threshold for that.
And at what point do they have to be accredited buyer? Or is that even
That's not really a thing. Gotcha. Yeah. So there's accredited investors, which if you have someone who's syndicating that investment, that investment group, we don't usually dive into that as much, especially with my company being the broker, maybe the lender, and they'll look at that. It's a great point because with them, if you have a client who's looking to syndicate and they're looking at going out to just retail investors and just kind of pitching their thing, they need to make sure that they're following the proper laws of who they can have in their syndication. And if they have someone that's non-accredited and we get to the lender portion and then they provide us the operating agreement of whoever the partners are, limited partners, GPs in there, we're typically not going to dive in deep into, okay, let us see the bank accounts, let us see the history of every one of the investors that involved with it. We're going to mostly assume that syndication has done that work, because if something happens in regards to the laws of the SEC in terms of them pitching and bringing on accredited bars, that's going to mostly happen to their entity if they get into an issue with that. So we usually don't worry too much about accreditation in terms of investors. But if you're talking about like them being qualified, they can have, I mean, banks like to see right now in terms of if you're bringing on partners and sponsors. If it's a syndication deal, you can bring on almost as many as you like because that's essentially what you're doing. But if it's a non-syndication and you're just trying to get partners involved, maybe local family members, friends and family, people that you really didn't have to go out to some retail marketplace to try to find investors, we usually like to see 5 to 10 once you start getting above that, banks start getting a little bit shaky because you're having to get a lot of hands in the pot. So a lot of times, if you can keep it to 5 to 10 sponsors on a deal that are interested in it, that's ideal. But if this is a syndication deal and they're experienced, like they've done this before, they've raised capital before, they've, the type of deal that they've done, then those are okay. And if you're looking at a syndication type deal, you're going to need that deal to be what's called non-recourse. So, and a non-recourse deal is essentially there's no need for a personal guarantee. The lender is essentially taking on the risk from the property and the cash flow from the property itself. And those are standard with Freddie Mac, Fannie Mae, and CMBS deals. They do not require, in most cases, a recourse. Now, there's going to be what's called your standard bad boy carve outs, which all that means is if you go off and you get a loan and we get a loan with Freddie Mac or Fannie Mae or a CMBS type deal, there is no standard recourse, but you go off and do drug activities or illegal activities in the property or with the money, you're still going to be held liable personally. So it doesn't oversee that, or it doesn't overshadow that. But there is no personal guarantees involved, so you can have it's an ideal fit for syndications. Now, some banks will also allow syndications, but when there is a personal guarantee, it gets a little bit more restrictive because all of the general partners, the GPs, or anyone with a ownership of 20% or more in the deal or in the loan, or ownership, of course, will need to sign on as a general partner. So when they start seeing 20 different investors in the deal, it starts to be less ideal for them. Hopefully that makes sense. But yeah, hopefully that answers your question too.
Yes, it does. Thank you very much.
No problem. All right. So just a little bit of background, just in terms of this market, not quite sure how many clients you guys are running up against. Most likely, I would assume, especially with most of my resi agents that are in the market right now, I imagine the majority of the clients that you're coming up against are probably looking for something like a self-storage or multifamily. It translates the easiest for residential type clients because most likely they either have their own home or they're looking at a duplex or triplex or fourplex that they own, and they're looking at 1031 exchanging that into a more of an apartment complex or something that they're familiar with. I shouldn't say it's extremely rare, but it's pretty rare that we see someone come from owning a couple fourplexes or duplexes, and the next thing you know, they want to own a Denny's. So a lot of times they're like, okay, hey, I'm looking at buying this multifamily because they already understand how rent works, how using a property management team, how understanding how that market and that type of property type operates. So in terms of getting lending, even in this environment, some of the top properties that most lenders are looking at or lending on or getting, a ton of great pricing for loan proceeds are going to be self-storage, industrial buildings, multifamily. Those are right now really great options in terms of getting some loans. So if you have something like that, we have multiple lenders that are still looking at deals for that. Right now, there is that discrepancy as we're filling on the residential side as well in terms of the cap rates, in terms of what a borrower is looking at purchasing a property for and what a seller is looking at selling the property for. There is still that gap or that difference between the two that are causing some deals not to really pencil out. Of course, interest rates are a huge component of that. But if you are looking at getting high leverage, getting the best and most aggressive rates right now, I think right now our agency rates are in the fives. Which is incredible. I mean, it's not ideal, obviously, but in terms of where rates have been, that's still pretty aggressive, and you can still get leverage up to 75% on most deals on those type of deals. So great opportunities there. Industrials are great opportunities. Those are very low in terms of property availability. So if you can get a good deal or someone who's selling that, those are great opportunities. And also self-storage units. Self-storage units have a very, very, very low delinquency rate. I think right now they're under 0.5%. So those are some options that lenders are absolutely okay with providing multiple terms on in very favorable terms. Now, once you start dipping into the next kind of tranche, so I would say in the first tranche, we have multifamily, industrial, warehousing, and self-storage. After that, you're probably looking at something like offices, retail properties, and then I would say office, retail property. I hesitate to say special use because once you get into special use, and I apologize with my pausing, I'm just out here in the desert in Arizona where it's getting drier because of the summer. So my allergies are getting me. I've taken some allergy medicine, but I needed to catch
You're
up.
okay.
Yeah.
You're okay.
It's just a little bit too dry out for me here. But anyway, for that second tranche, I would say, yeah, offices and retail. So let's say for that first realm of multifamily industrial, and this is just a great rule of thumb. If you're looking at clients and you got clients that are asking you questions, you don't have to be an expert. You definitely want to get us involved if they have some in-depth questions that you don't know. But if you're just kind of trying to gauge, what the expectations of that client should have, I would say if they're looking at purchasing a multifamily property, an industrial property, or a self-storage unit on any commercial deal, unless they are going to owner occupy that property. And what that means is, or unless, let me go ahead and say they're going to run a business, their own personal business that is going to occupy 51% or more of the building space, then they can go what's called SBA, Small Business Administration type loan. It's kind of like an FHA loan, where the government comes in and they will insure a portion of that loan. So on an SBA deal, we can get leverage as high as 85 to 90%. So that's one of the highest leverage type loans in the commercial realm you can get. So those are great deals. They have to be owner occupied. They have to occupy 51% of the space or more. And they can do that on properties such as retail properties, office properties, motels, hotels, special units, gas stations, anything like that. They can do it on. They cannot do that on a multifamily property. And they cannot, mostly just multifamily property is probably going to be one of the only options that they can't do it on. Multifamily and mobile home, a mobile home park. They will not allow SBA to do those. So those are great opportunities. If you have someone who's looking at, maybe they're a food truck and they're trying to buy their first retail space and move their restaurant in there, they can get an SBA loan. They can get leverage up to, 85 to 90%. So they only have to put down 10 to 15% as a down payment. Very, very, very favorable terms in terms of, the requirements for reserves, things like that. So getting that out of the way. Obviously, that's a whole different beast. So I wanted to make sure, hey, you knew that that's available in terms of that. Outside of that, if you are running up against investors who are real estate investors, where they are not going to occupy the property and run a business in it, they are just going to own the building and they're going to rent it out to a business so that they can just collect the cash flow. That is what we call a real estate investment. So if you have a client looking to do that, and you can do that on multifamily, obviously, if someone owns a multifamily property like an apartment complex, they're not going to occupy 51% of that. They're going to rent that whole thing out. So those type of properties, industrial and self-storage, if you're looking at that, there is a minimum that my team and my company takes on of 25% as a down payment on all commercial properties. So regardless what it is, if someone's looking at buy something and they're not looking at it being an owner occupied and going SBA, they're going to need 25% as a down payment. Yes, there are some programs, there are some options, like even with Freddie or Fannie, technically they can go up to 80% leverage. We do not take that on or take that out to market at 80%. Why? Is because we are a brokerage. Our main benefit is to get that deal the most amount of lenders competing on that deal, so that we can go to work and negotiate for the best terms. And that usually doesn't work out if we're doing something that the majority of lenders do not provide. Majority of lenders are going to have 25% as an overlay, as their down payment on these type of deals. So if we go into the market at 80, we might only get maybe 1 or 2 lenders, maybe 3 that are interested in that deal. And say out of experience, at least 1 or 2 are going to bow out, and then we only have 1 lender left. There's not a lot of negotiating with that. And your client's going to, and most likely all of them probably will bow out, and then your client's going to feel like they've wasted their time. So we do that minimum with 25. We're able to get 6, 12, 15 different lenders competing. And then once we open up the negotiation on competing, if we have that many lenders that are interested in the deal, then we push leverage. Then we're like, okay, who can get us the lowest interest rate? Who can get us the lowest points and fees? Who can get us the lowest prepayment penalties? Who can get us the maximum leverage possible? At that point is a much stronger negotiating seat that we like to take on. So short answer on that, or short story on that, is 25% minimum down on any type of commercial real estate investment property. That's going to be for multifamily, industrial, and primarily multifamily, industrial, and self-storage. Once you get down to that second tranche, you're looking at retail and office. In this environment, you're probably looking at anywhere from 30 to 35% as a down payment. So on that first one, let me just go back for a second. For the first one, you're looking at 25 to 30 as a down payment, depending on the experience level of your client. If you got someone who's only owned their own single family home, maybe they have one other single family home that they're renting out, and now they want to buy a 10-unit multifamily property because they came into a lot of money somehow. And they don't have a lot of experience. They're not trying to bring on any other partners. They're probably looking at, instead of that minimum 25, they're probably looking at around 30% as a down payment, and they're going to have 6 to 9 months of post-closing reserves. That's what it's most likely going to take for that type of client to get them some lending. And that's on that top tier, 1-tier type properties, multifamily, industrial, and self-storage. So if we take that same borrower and we go down to the second one for retail and office, those are riskier assets right now. Not a lot of people are buying offices or willing to lend on offices, because most people are like myself and probably like some of you. I'm sure you don't always go into an office. Most people work from home. So offices are having a struggle. And not a lot of lenders are seeing that trend go away. Even as much as everyone's trying to forecast, people love the office, they come back in suburbs, things like that. They also know that trend is of people working from home is going to stay. So offices are very difficult to kind of keep up with. Same goes for retail. Retail has always been a more riskier asset. So you're looking at probably around a 30 to 35% minimum down payment for those type of assets. Still 6 to 9 months post-closing reserves. And all post-closing reserves means is for the monthly payment, the mortgage payment, they're going to need to have some bit of reserves. It can be their retirement account, their investment accounts, things like that. It has to be some type of liquid type asset. Can't be that they own another property that has $500,000 in it. In equity, it has to be something that can be what's called cash equivalent, like a retirement account, investment account, CDs, mutual funds, things like that. They'll need around 6 to 9 months of post-closing reserves to have something like that penciled through if it's not going to go SBA. And the third one would be what we call hotels and special use. It used to only be special use, and hotel used to be in kind of that second tranche, but hotels, motels are just right now just extremely hard to get financing on. They've struggled quite a bit. You're having a lot of clients who are looking at converting those hotels into multifamily to get funds on, and that's been a little bit more successful. But right now, anything that is what considered special use or a hotel, you're probably looking at anywhere from that 35 to 40% as a down payment and 6 to 9 months of post-closing reserves to get some proper lending on those deals. Now, what a special use deal is, just real quick, is anything that has been built or is specifically built for it can only do that function. A gas station or a liquor store cannot operate as an office building. or, a bank. It's special permitted and special used to be that type of industry. A marina, a gym, an event center, a car wash. Those are all special use properties. If a lender lends on that and the borrower or client forecloses, that lender now either has to get that same type or a new owner with that same mindset or business to go in there, or they have to reconstruct the whole property. That is what a special use is. And those, like I said, are going to be around 35 to 40% down, 6 to 9 months post closing reserves to get proper lending from banks and credit unions at this time.
Wow.
Just a
Okay.
little bit of just a little bit of, I know that was probably a lot, but I like, my mindset is I like to keep it in little chunks and keys to kind of to quickly point something out. That is not gospel. Doesn't mean that no one in the country will lend on a, an investor car wash for less than 40% as a down payment, but that is going to get your client the majority of options, which is what you want to do, which is what I want to do. And then we can have multiple lenders compete because we want to make sure that they can get to the closing table and that they have an option of getting some of the best terms available.
Good information.
Good. So any other questions or that I can answer for you or anything, any questions regarding kind of what I was just mentioning on that?
How can we reach you?
Yeah, so you can reach me via email or phone number, and I can, and I think on here what I will do is I will put in the chat my information, just to kind of voice it. It is F Owens, my first name's Fred, my last name is Owens. It's my first initial, and then my last name at CommLoan.com. That's FOWENS at COMMLOAN.com is my email. Then I'll give you my phone number, my office number, and also my work cell. So you can feel free to give me a call, shoot me an email, send me a text, and we can definitely connect about any projects or any clients that are in need of assistance. I can absolutely help you out with that as well.
Great. Thank you.
Yes, absolutely.
I'm going to stop the recording, but I want you to stay on.
Okay, sure.
Does anybody else have any questions? I know Janilla had to leave, but she'll get the recording. Laura, Belinda, you have any questions?
No, I don't. I do have a friend whose husband owns a hotel, and I think, well, not him, the family, and seems like they're trying to sell it. And yes, precisely because of what Fred is commenting, they have had problem because of the financing of, for a new owner, the buyer. But I don't know. I am not in commercial real estate, so
You're in real estate.
yeah. Well, I might like if it helps to send her your information, and I don't know if they have a buyer or something, but I just don't know. Like I haven't been updated about it, so I don't know in what situation they are right now.
Yeah, and that's something that I don't know if they have someone who's listing their property. But if they have their property listed with the listing agent, one thing that we do offer, definitely for our EXP commercial agent options is, and actually I send this out, or my team does. If you have a listed property in the due diligence package, we like to provide some pre-quals, which is essentially some loan previews for clients to see. That type of deal, I would definitely be advertising to SBA. Because right now, someone looking to do a hotel, I don't know what the cash flow is on the hotel, but if they're looking at someone who's looking at just doing a regular bank credit union type deal, man, you're looking at 50% probably leverage on something like that. It's very difficult to get a hotel deal to pencil through unless it can go SBA. You do still have some SBA lenders that are interested in it, even they're being a little bit more aggressive in terms of their requirements, which is strange because the government will come in and on a hotel deal, the government will cover up to 85% of the real estate on that. So it gives them a lot more leverage. I mean, they're very well protected on that type of deal. But yeah, if we were taking on something like that, I think SBA would be the way to go, especially for the buyers. If they're trying to get, or if they're running to buyers that are looking at putting down that very little capital, they're probably gonna have to go SBA on a hotel deal. And that's something that, you know, I think I mentioned that a little bit, but that was something that maybe I touched on hotel and special use right now. I'm pretty much only working on SBA deals with those because other than that, it's just not really penciling through. Buyers are asking for a ton. Excuse me, not buyers. Sellers are asking for a lot more than what that property is particularly worth in this type of market. And with rates where they're at, I mean, some lenders our borrowers are looking at maybe even getting a loan on like 40%, 45% on a deal, and it just doesn't work out. And to lock them into a product or a property that, you know, for the next 5, 7, 10 years, they're only making a cash flow that's, you know, producing a return of like 6 or 7%. Just doesn't work out for them. So that's where we're having that difference between our buyers and sellers, to where a lot of those deals aren't penciling out unless they can get some government type loans like an SBA or someone who's entering into the market that's willing to do a value add to it. So, but anyway, yeah, I'd be more than happy to talking to them, seeing maybe what their struggles are, what they've been running into, because that might be something that we can maybe promote for them as like, hey, let's get you out a pricing sheet or some loan options based off of SBA, and maybe that can spur some buyers that are interested in entering into the arena, and going that route.
Oh,
Yeah, that
thank you
would be
very
real
much.
helpful.
Yeah. Yeah. And right now they're out of the country until the beginning of August. But I can contact my friend. It's not her deal, it's the husband's family, but anything helps, you know.
Mhm.
The information that I have has been just conversations about it, but yeah, I will very gladly share your information with her and see, you know, what I don't know, new ways, new information they can get, even though they're very involved, like his family, they're very involved with real estate, like they have several properties, several businesses, not just that hotel,
Mhm.
which is, for what I believe, is family owned. But yeah, sure, that'll definitely help. Thank you.
Good. Yeah, absolutely. Yeah, and of
Thank,
course, if you have any other questions, just let me know. I'd be more than happy to answer those for you. And I
thank you
did
so
in the
much.
chat because I don't know. I know I didn't have the chat up myself throughout the presentation, but I just put the chat up. I put my email address in there and my phone number. So feel free to text, call, or shoot me an email or any questions or anything that you guys might have.
Thank you very much.
No problem.
So we would just register like somebody with you, or how does it work as far as referring to your company?
Yeah, so we do have a website. That's perfect, actually. Let me see here. So, what is it? EXP. Yeah, there we go. So we have a website that you can register on. It's called exp.comloan.com. Put that in the chat so you can go to it and you can actually check it out yourself as well. On that one, that is somewhere where you can send your clients to, in order to have them get a quote. Now, in terms of the registration, with you being a EXP agent, you're already registered as long as you have a broker that you're licensed with and you're hanging your license with them. So what I like to tell my referral partners is just email me. We do have this platform, and when you check it out, it's a get a quote. You can put in the information for your clients, and then once you get to, and actually, let me see here. Can I share my screen on this? I don't know
I
if I
think
have my ability to do so. I think it's only the host who can do that.
you should be able
Maybe. Let me
to.
see here.
I thought I had changed the
Oh, it
settings.
says share screen. I can do that. Okay. Here we go. So share. Let me see if it's a work. Do you see this screen?
I
Is it pop?
do.
Oh, perfect. Okay. So on the website, this is what it looks like. So if you had a client and you go to exp.comloan.com, they can go here, they can select their property type. Let's say they do, the standard multifamily, they can pick what they're looking at doing, purchase, and then they can pick their property value. Let's say they're looking at buying a $4 million property. They're looking at putting now they have the ability on here to put like 90, 100%. It doesn't mean that we'll get them a loan for that. But let's say, obviously, one thing that we'll do for them is we'll be like 75%. We can get some agency debt on this. Go to continue. It's multifamily. They put in their name, email address, phone number. This is where they would have to select their referral agent. So we got quite a few in there now, but how you get added in there is you'd have to push this plus sign, and then you put in your name, last name, email address, and phone number, and that would add you to that list. This is a great tool. It really is. What I tell my referral partners with EXP is I don't advise you sending this out to your client if you are going to use this. It's just, having, if you say, okay, hey, here's this link, go to it and make sure you put me in and fill out your information. A lot of times they'll do the front end. A lot of times they'll get to here, and a lot of times either they'll miss this or they'll select the wrong person or whatever, and the next thing you might not have heard back from them or whatever, or you do, and now we have to kind of try to search this down and try to get it to the right person, because if they select the wrong person, most likely that person that gets selected may, in most cases, honestly won't know who that person is, and will just probably assume that they spoke to them at some conference or something sometime down the line. So it's most likely the referral agent is going to be like, hey, Mr. John Smith, I don't know this person, and this might be the wrong person or the wrong referral. They'll probably think, oh yeah, that was me. Yeah, I think I spoke to that person, or someone referred him over. So it can be a little bit difficult if we don't know, and then you would have to reach out and let us know, like, hey, did you ever reach out to, or you ever hear from them? Then we have to kind of go down the web to see, who this person properly went with. So I tell my partners, do this for them. If you really want to get a quote through the system, you can go through, you can put in their information, you can just talk to them, say, oh yeah, great, we're looking for this, boom, boom, boom. You put continue, you put in their email, and then you select yourself so that you know that it's going to you. That's what I personally would do if I was using this. Um, Other than that, I honestly, since I'm the main representative for the commercial loans for EXP, you can just reach out to me directly via email. I think that's the easiest way, because this does go through a system. It has to go through a sorting system, and I think it's 24, 48 hours, it will get to me. So, and a lot of times if you're needing a quote or you're needing information or you have a question, it's just faster if you just emailed me versus going through this. Either way, you're going to get credit. So if I have to build up a file in email, or you send them over and I get them a quote, I put your information in through my system, so you have it anyway. So I think this is a great tool. I don't use it that much, but we do have it. If you have, some clients that, you're just maybe blasting it out and seeing who you can get, you can definitely send it out. But I just would harp on just making sure that they select you within the referral agent portion. Other than that, just shoot me an email with it, and then I will put you down your name, email, as a referral on it, and then you will get access to a database to where you will see all of the loans that you've referred in the pipeline and where it's at in the process, and you of course will get that referral commission.
So let me make this clear to
Mm-hmm.
everyone. So you don't have to have a mortgage license to get 15% referral fee on this $3 million commercial property. And you're not the realtor. You are just a referring agent to commercial loans.
Exactly. That is exactly correct.
And what's 15% of $3 million?
That should be 4,500 bucks, I assume. Let me look at it though.
4,500?
Yeah, I think so. Because it's 15%, it's 15% of our commission. It's a commission split.
Oh, okay.
Yeah, so let's say it's we charge typically 1% as a brokering fee. So we take that as $30,000, you get 15% of that. So that's 4,500 bucks just for referring it over. So yeah, it's definitely something. And what I have a lot of my referral partners do is and I assume maybe, I don't know how much you guys do it. You guys probably don't do it as much on the residential. You probably do a lot of referrals, which are in terms of your business, which is great. Commercial realm, because I do have my commercial real estate license as well. So I do have a real estate license. It's here in Arizona. And initially, I went through that process just to see what the other side does. So, like I said, I've done mortgage loans, residential, and now commercial for years now. And obviously, one side knows what one's doing, or doesn't always know what the other side's doing. So, I did get my real estate license to kind of understand the agent side more. And a lot of times on the commercial, you're hammering phones, trying to pick up new deals, calling the clients, seeing if you can get listings, things like that. So one thing that I kind of coach my commercial partners to do is, hey, if you're calling your clients and you're saying, hey, you're looking at listing this property, and they're like, nope, I'm not looking at listing. Rates too high, I can't get what I want. I'm just gonna hold on to it, whatever. Okay, great. They're not looking at listing. Are you looking at buying something new? Most likely they're gonna be saying this market, no, I'm not looking at buying anything new. Things are too expensive, rates are too high. Well, I just encourage them, ask that third question. All right, well, you're not looking at buying, you're not looking at selling. On any other properties that you have, are you looking at refinancing? Do you have any terms coming up? Because in most cases, especially in commercial, it's not like residential where you have a 30-year mortgage on mostly everything. Commercial, your standard maturity on deals or loans are going to be 5 years, 7 years, or 10 years. There's very rare that you have someone with like a 20 or 30-year maturity on their deal. They're most likely are coming up on a maturity because commercial loans are a lot more riskier. They're only based off of profit. So lenders want to continue cycling that through faster than they would like on a standard residential type deal, which mostly in most cases they get sold to Freddie Mac or Fannie Mae anyway, or Ginnie Mae on the government side. So you know 5, 7, 10 years somewhere on bridge loans, things like that. You're usually going to find someone that needs to refinance in a few years. So that's a great way to where it just creates some additional income. If you're, referring over to us multiple deals just because, hey, they're not looking at listing, they're not looking at selling, but all of your clients, even the ones that you sell to or that do buy, they're going to have to do something with their mortgage at some point. So that's a great way for you to just continue getting a revenue source. Because if you do, 2 or 3 of those referrals a month or a year, whatever, that's an additional, $12,000 just by doing so. Probably
Right. And
$13,000.
you're not limited to the state you're licensed in either. You can do this in all 50 states.
Exactly, majority. We don't do it in the Dakota, South Dakota, or North Dakota, and currently we don't do it in Nevada. We're working on Nevada. That's very close to us getting that. There's some of those states that require us to have a brick and mortar, and that's like Nevada. So we're getting that team set up there. The Dakotas we just don't have on. They're a little bit more of a different beast, but we haven't had too much of an issue of people trying to buy commercial properties in Dakota. So, but
Okay,
yeah, other than that,
47 states.
yeah, exactly. Other than that, yes, we usually have some lending partners in those type of states that we can do that for. So if you have someone who's looking at refinancing, clients are like, hey, I got a property in California, I got one in Arizona, I got one in California, in Texas or Georgia or wherever. Those are great clients because they might need to get lending for all of those. And if you know that, we can help out and you can refer them over. We can definitely get them some decent sized deals on their properties, and you get that referral split for that. And those are just great ways of increasing some additional income. And all you're doing is just referring over. And like you said, you don't have to have a license. You don't really have to know much about it. And what I find is most importantly, we're a brokerage. So I know some of the main contingent points of commercial agents and residential agents of referring lending sources is you don't want to get pigeonholed to if that lender doesn't perform or doesn't get the financing done. Obviously that's a reflection. It can be a reflection of you and who you referred over. Well, being us a brokerage, we have over 700 lenders. We take that off of you, so you don't have to feel like, well, and that's usually where lenders are trying to give up. I think, what is it, 1 to 3 lenders that they try to refer, so that if one lender doesn't perform well, the borrower is not kind of looking at them like, oh wow, you told me to go to this person. We've got hundreds of lenders that they will ultimately select. They will select what lender they want. They will get, if their deal is good enough, they will get anywhere from 6 to 12 different loan options. And then of those loan options, they're going to pick one to three, and then they're going to choose who they want to go with. We'll connect them. So it just takes you off of that. You don't have to feel pressured of like, oh, hey, you know, I told you to go to this bank and they denied it and they or messed it up or whatever, and feel like you're held responsible for it.
And all lenders are not the same. I stress that to my clients, you know, even
Mhm.
though they all lend money, they all have different requirements. And I equate it to restaurants. Like you can't go to all restaurants and get a lobster dinner, but you're still
Absolutely.
a restaurant.
Yeah, absolutely. Great way, great analogy, great way of thinking of it. And it's even more so the case for commercial than residential. Obviously, in residential, the guidelines are there, the restrictions are there. Anyone that can qualify for a conventional loan or a Freddie Mac loan or a Fannie Mae loan, they get that DU approval on that property or on that type of deal. They can pretty much go to any lender or any bank that does that and get, and get that loan. And they'll get it approved for it because it already has a route to go on the secondary market. Same for Ginnie Mae or FHA, VA, all of those. That's really nice about the residential. Commercial is not like that. Commercial, a lot of these are balance sheet loans. A lot of these are going down to the discretion of that bank, and they do also get sold on the secondary market. But when they have their committees, they look at that deal and they're like, oh, you know what? I don't like where it's at. I don't like the experience level of the borrower. I don't like the reserve requirements. I don't like the credit score. They can pick and choose what they want of that, and they can deny those loans depending on whatever they kind of almost whatever they feel. Now, it can't be something like, oh, okay, I saw a picture of the borrowers and I don't like the way they look. That's a little bit different. That's the legality. Fair, you can't do that. But if something is up with the property where it's at, or it's just, hey, they decided to change their mind on the area that it's in, they can absolutely deny it. That's obviously not always the case with residential because we have a lot more regulations in place for that. So that is just why you have to go out to multiple lenders, because maybe this bank won't do it for whatever reason, but another bank will do it, or a private money lender will do it, or a debt fund, or a credit union, things like that. And we have access to them. Same property, same metrics. This bank won't, but the bank next door might do it. And it's just a little bit more of a dance within the commercial realm than it is with residential. Because hey, like I said, if I can get you with a conventional loan and it's going to pass Freddie Mac with a conventional, I can pretty much get it with any bank that does Freddie Mac, because they already know, well, Freddie Mac's going to buy it, so it doesn't matter. Now they just have to figure out what they want as their margin profit.
Okay.
Good.
Well,
That was a lot of
thank you very
questions. Yeah,
much. Yeah.
absolutely. So let me know if you need anything else. You have my contact info, and I look forward to hearing from you. Now, did you say you had another question for me that you wanted to either email or call me about? Or did you still had something there?